Hey everyone, welcome back to the podcast. It's Forex daily news and updates here, bringing you the latest insights from the Forex market. If you're serious about trading, stick around because we're diving deep into this week's market movers and what to expect next week. Let's get into it. Alright, let's start by looking at what happened in the Forex market this past week. We saw some major moves across the board, with the US dollar showing strength against several major currencies. The DXY dollar index climbed higher as traders reacted to fresh economic data and central bank updates. The euro to US dollar pair struggled to maintain momentum, dropping below key support levels. European economic data, particularly Germany's industrial output figures, came in weaker than expected, adding pressure to the euro. Meanwhile, the pound sterling to US dollar pair saw volatility as the Bank of England's latest comments hinted at a potential rate cut in the coming months. Inflation data remained mixed, keeping traders on edge. US dollar to Japanese yen surged past resistance as US bond yields spiked, with the Federal Reserve maintaining a hawkish stance despite calls for a policy shift. The Bank of Japan's cautious approach hasn't helped the yen recover. Gold, XAUUSD, remained under pressure as the dollar gained ground. A brief rally in the middle of the week faded quickly, highlighting the bearish sentiment in the market. Overall, it's been a week of risk-on sentiment, with traders adjusting positions ahead of key economic releases. So, what's been driving these moves? Well, let's break it down. US inflation data. The latest CPI report showed inflation cooling slightly but still above the Fed's comfort zone. This kept the dollar strong as traders priced in fewer rate cuts in the near term. Central bank policies, the Fed, ECB, and BOE all had policy updates this week, and while there were no major surprises, the tone of their statements shaped market sentiment. Geopolitical developments, tensions in the Middle East and ongoing concerns about global trade disruptions played a role in safe haven flows, particularly in the yen and gold markets. Equity market performance. Stock indices had a strong week, which weighed on traditional safe haven assets like the yen and Swiss franc, while supporting riskier currencies like the Australian and Canadian dollars. Looking at these factors, it's clear that traders were focused on central bank signals and economic data rather than external shocks. Now, let's talk about what's ahead for Forex traders next week. Here's what you need to keep an eye on. FOMC minutes release. Wednesday. This is going to be a big one. Traders will be looking for clues about the Fed's next move. If the minutes reveal a more cautious stance, the dollar could face some pressure. UK GDP data. Friday. This will be crucial for the pound. If we see weak growth numbers, expect further downside for pound sterling to US dollar. Eurozone inflation numbers. The euro has been struggling, and another weak inflation report could push euro to US dollar lower. China's economic updates. The Australian and New Zealand dollars often move in response to China's economic health, so any major surprises in trade data could create volatility. Technical levels to watch. Euro to US dollar. Support at 1.0700, resistance at 1.0850. Pound sterling to US dollar. Key level at 1.2500, with a possible break lower if sentiment worsens. US dollar to Japanese yen. Eyes on 150.00. If it breaks, we could see further upside. Gold. If it stays below $2,000, the bears are in control. All in all, expect another week of sharp moves, especially with key data releases on the horizon. If you're trading, keep an eye on those central bank signals and major economic reports. Before we wrap up, here are some quick trading tips to help you navigate the market next week. Stay updated, keep an eye on economic calendars and be prepared for surprises. Use proper risk management, set your stop losses and don't over-leverage. Follow market sentiment. If risk appetite shifts, adjust your positions accordingly. Watch the dollar. It remains the driving force in the market, so any shift in Fed expectations will have a ripple effect across all pairs. That's a wrap for today. If you enjoyed this episode, make sure to subscribe and leave a review. Also, don't forget to check out my latest Forex analysis videos on YouTube. Thanks for tuning in, and I'll catch you next time.